Hi everyone, let's look at my bullish and bearish low time frame and micro Elliott Wave scenarios on Bitcoin, starting with the low time frame bullish scenario, where we're looking at this move to the upside as a wave 1 or a wave A, followed by a 3-wave corrective structure and then a wave 2 or a wave B. That is already finished, bouncing on the golden pocket, taken from the low to the high over here. Or we still have a bit more downside to go, where we do have a bit of a blue target area over here between 25.6k and 25.9k for some extra support. But eventually we expect a continuation to the upside in either a wave A, B, C, or we get an impulsive structure in a wave 1, 2, and then a bigger 3 to the upside. Now the target area for wave C is between the 1 and the 1.236, taken from the low to then the high of A to the current low that we have over here, which then is the low of B, where the target is sitting between 28.2k and 28.8k, which is, as you can see, right between the target boxes that I have over here. So that's between 28 and 28.1k for the lower target box. And the one just above is between 28.9k and 28.3k. So yeah, these target areas are definitely interesting resistance areas to wait and see how price is going to interact there. And for a potential impulsive scenario, the minimum target for this wave 3 is the 1.618, and that is sitting at 29.9k. In the more bearish scenario, which is an alternative scenario to me, we are looking for more downside. And the reason it's alternative is because this structure to the upside is then labeled as a wave C and then an expanding flat A, B, C. However, this wave C is extremely extended. It's extended beyond the 2.618, which already is a rare target for a wave C. And this target is taken with the trend-based fib extension from the low to the high of A to the low of wave B, where the common target is around the 1.618, and this is a rare target, but you can see price even moved far beyond that target. So that's the reason why the probabilities for this scenario are not as high, right? That's basically what I'm saying. Now, if we then look at the potential downside after this being an A, B, C, and then potentially continuation down, this can either be a wave A, B, C, or an impulse 1, 2, 3, 4, 5. Not that big of a fan, honestly, of this diagonal. It can also still be a WXY, but with a WXY over here, we might not take this low in this scenario, which is fine. Then you have a 3, 3, and then another 3-wave to the upside. But even in this more, let's say, bearish scenario, I would actually still prefer seeing another move to the upside where at least a high of C is taken over here, where then this you get something like either something like this or something like this eventually, right? And then this is an expanding flat 335 or a 3, 3, and then another 3 towards the upside. And then the question is, what's this structure over here? Now, I prefer this to be an A, B, C to the downside instead of a 5-wave impulsive structure, as wave 4 is very long over here. And also because if this is a wave 3, then one can say it is extended, as if you take a trend-based fib extension from the high to the low to then the high over here of wave 2 to measure wave 3, it did hit with the wick the 1.618. So then you say that wave 3 is extended. And if wave 3 is extended, then it is like extremely rare for a wave 5 to be extended as well. However, in this scenario, this move down is extended, and if this is a wave 3 that is extended and this a wave 5 that is extended, that is just extremely rare in an impulsive structure. So I prefer this to be an A, B, C, as well as that the last structure to the downside here had the highest amount of volume, which you can see over here, which is very uncommon for a wave 5, but more common in a wave C that is very sharp and short. So I prefer this to be a 3-wave move instead of a 5-wave move. And in this bearish scenario, yeah, you could expect more downside, but I would still prefer to eventually see this high taken, whatever price does more locally. If we then go to the micro bearish scenario, we got to zoom into the 15 over here. And if we then have a look at what is happening, I somehow have 2 Fibonacci targets over here, and I don't really know why that actually is the case. But in this particular scenario, we then have a potential WXY going on, and a WXY, and I'm actually going to measure myself to see which target is going to be actually the right one, is measured by taking a trend-based fib extension from the high to the low of W to then the high of wave X. And then we figure out that this target over here can be removed. That's absolutely brilliant. And we have the Y target over here. So then the most common target for potential wave Y is between the 0.618 and the 1.236. But the reason I put my white box over here is because it includes the target box, because the 1.236 is also below these lows over here, so that's not really something you want to see if this is potentially still a scenario towards the upside, unless we're thinking about an expanding flat scenario, but I don't prefer that at the moment as it stands. So this is still a very interesting target, where this then is a three-wave structure in a WXY, followed here by an A sideways B C, where this B is then a WXY scenario, and then we have a nice five-wave structure to the upside for the blue C, where the blue C stopped perfectly around the most common target area for wave C, with the fibs taken from the low to the high of A to the low of B. So this is very nice. Yeah, a wick above, that's perfectly fine, but all the candles closing nicely in this area over here, which is exactly what you want to see in this particular scenario, for then eventually a wave Y to the downside, which then also is a three-wave scenario. And usually wave W and wave Y do have a relationship in time. The 1-to-1 is something to keep in mind. The 0.618 as well, which has not yet been reached, so one can expect that the low of wave Y, if this is a WXY, has not yet been made. So then we have to wait and see what price does if it goes lower. Also, the 1.618 is still a target potentially for a wave Y as well, which is all the way over here on a Saturday, the 10th of June. So this area is going to be quite important for this more bearish scenario. In the bullish scenario, quite difficult actually, because the bullish scenario, well, we had potentially a 1-2-1-2 yesterday, right, with the invalidation being here, which has been hit now as price wicked into this area. So it wicked below this low, so potential 1-2-1-2 is therefore invalidated. In this scenario, the WXY is already finished with the low made over here, and we're already looking for upside. Now, of course, that is possible. Upside is absolutely possible. But if we look at this to be a potential wave 1, it looks very much like a three-wave structure and not a five-wave move in a 1, 2, 3, 4, 5. Difficult to count 5 waves here. It looks more like a 3 as mentioned. So if this is a 3, and we're thinking about an, let's say, impulsive structure or a more bullish structure, then a diagonal is something to keep in mind, where you then have a 3, 3, and then you're just looking for something like this. The only problem in my opinion with this is that if this is a diagonal and this is already a wave 1, well, if this is a potential A or 1, but if this is a potential wave A or a wave 1 in the very bullish scenario, and this is the low of 2 or a wave B, then if this is a wave C, I'm afraid it's not going to actually take the high over here because of the measurements of a diagonal. So potentially it could be nicer for price to move down, take the low, make a new low over here, and then impulsively move up. Of course, we have to wait and see what price is going to do, because we do have some bullish divergences going on, as well as bearish, by the way, over here. But we do have some bullish divergences, which are preferred over the bearish ones at the moment. So we have to wait and see how price is going to react from bouncing over here right on top of the golden pocket, which is a common target for a wave 2 in a leading diagonal scenario, where this leading diagonal could of course be potentially a 1-2 and then another 1-2, but I prefer a 1-2-1-2 to be something like this, 1-2-1-2, where the second one takes the high of the first one. So, and then you get like a sort of a bigger diagonal basically. So I have to wait and see of course how this is going to pan out, but this is currently on my chart and something I do keep my eye on. And if we then go to the CVD divergences, well, I mentioned yesterday, actually this played out very nicely for the ones that were awake when this happened, that over here, yeah, we have bearish divergences, but I never really like to have bearish or bullish divergences with an in-between high, meaning it's in between a move to the downside. I prefer to see divergences with an absolute high or an absolute low, and this one is like in the middle of a move down. So one could say we have bearish divergences, right? We have a lower high on price, we have a higher high on the CVD, which I'll show you in a second, where the target is then this low. However, yesterday I mentioned what I prefer to see, what's funny, is price moving down, then returning and seeing bearish divergences. And what happened? We created bearish divergences. It was quite interesting. So price moving down, price moving up, and the yellow line over here showing bearish divergences, lower high on price, higher high on the CVD, trading opportunity. That was actually very nice. Mentioned this in the video yesterday as well. I also got the snippet tool, as I can then show you both over here, lower high on price, higher high on the CVD. Very nice indeed. Now this one, this bearish divergence already played out as these lows over here has been taken. So that is very nice. Now, we also have the bullish divergence, and these bullish divergences are made with the actual low. So not an in-between high or low, but with the actual low. We have a low over here, creating a move to the upside, 3 waves down, and now we have bullish divergences, We're over here on the blue line. That's where you have to see higher low on price, but with the CVD of the blue line over here, you can see that on the right side, the blue line is below my cursor line at the moment, which is a bullish CVD divergence. Higher lower price, lower low on the CVD, which you can see here. Higher low on price, lower low on the CVD with the green line. And then the target for this is the high over here. So yeah, we do have a bit of bear going on, a bit of bull going on, but in this particular scenario, the bull is kind of like preferred because it's made with an actual low. But we have to wait and see, of course, as no indicator, no whatever takes or gives a 100% win rate, let's say, right, in bullish and bearish divergences. So I have to wait and see how this is gonna play out. So yeah, the lower time frames, quite confusing, one can say. It's already quite a long range as well. Hopefully today, before the weekend, we get a little bit of a decisive move before, well, potentially we're gonna start ranging in the weekend, as the weekends are quite famous for ranging moments on the charts. So let's wait and see what happens on the chart. Now at 1 p.m. I can't provide you with an update as I'm speaking at an event, but 7 p.m. is gonna be the next one. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.